Boyar Research is out with this Forgotten 40 report, the 40 underpriced stocks that they see with significant potential to outperform in the year ahead. Jonathan Boyar is the president of the Boyar Value Group and joins us now with three top picks here from the list. I want to get into the three picks that we have on the screen here. We have Uber, we have Markel Group, and we also have Atlanta Braves. Before we do that, though, tell us what screeners you're using, because there's a lot of ways that people are evaluating or trying to identify some of these undervalued stocks. What is that common theme?
The common theme, first, thanks for having me. The common theme is, what would a business person pay for the entire business? We essentially take a private equity approach to public markets, so we look to see what their business is worth to an acquirer, which is what we think is true worth for a business. And this year's Forgotten 40 really had two large themes. One, small caps. We think it's the cheapest area of the market. About almost 50% of the entire Forgotten 40 consists of names under $10 billion. So that's obviously an area we're gravitating towards. And also conglomerates, which is one of the names, Markel, that we have there. We think that's a great place to go because a lot of them are cheap and a lot of them are buying back shares at very attractive prices.
So it's interesting because when I take a look at the first name that we've got on that full screen there, Uber, I don't necessarily think of it as cheap. What's the base case for Uber? Absolutely.
Yeah, it's a non-traditional value stock, but it's actually selling, if you look at it, at basically almost a market multiple, and it's growing like 35% a year. It's gotten killed over the last 2 months because of the threat of robo-taxis and autonomous vehicles, et cetera. And I think that threat is way overblown. The technology is not there yet. And Uber is going to be a beneficiary of autonomous driving when it occurs. So it's a name we're excited about, and it's rare to get such a fast-growing company at such a reasonable valuation.
So, speaking of reasonable valuations, you actually called Markel's valuation depressed in the notes that you sent over. What do you think that opportunity looks like here for investors?
Yeah, the opportunity with Markel, and it's known as a baby Berkshire. It's run by Tom Gaynor, and it's a very good insurance company. It's had historically fantastic returns. It's now selling at about 1.3 times book, which is cheap. There's also an activist involved, Jana Partners, who at a presentation called for some significant changes at the company, which a lot of it we do agree with. They're also going to buy back a ton of stock, and that's one way that conglomerates can really take advantage of the discrepancy in their share price, is to really almost literally buying a dollar for 50 cents.
And we want to end on the Atlanta Braves. Why do you like this name?
It's one of the few ways to purchase publicly traded, to purchase sports teams. It's trading at a significant discount to what we believe it's worth. It's trading about $37, $38 a share. We think it's worth about $57, $58. It's controlled by media mogul John Malone, and over the past year or two, he's taken steps to simplify his empire. It was a spin-out, and the 2-year spin-out milestone happens in July, and we think this is a name that in the next year or two should be taken over.
All right, well, we look forward to continuing to talk to you about the performance of these names. Really great insight for our audience. Jonathan, thank you so much.
Thanks for having me.
Appreciate it.